Okay, as we enter a whole new week of trade, let's take stock of the global cues over the weekend. Now, let me begin by saying the US global cues weren't too good. The Dow slid 160 points, making it a two-day fall. The S&P 500 slid 0.8% to 3,426, so that also erased a lot of gains. The Nasdaq, after falling 4.5% on Thursday, fell again another 1.3% on Friday to 11,300. Now, what's encouraging to know is that on Friday at one point it was down around 4% when Apple was down around 8%, but then Apple recovered to around 0.1% positive by the end of the trading session, and that's actually what led the Nasdaq to recover and close only 1.3% down. But still, all your major tech stocks were losing on Friday. It was a clear reversal of trend that we've seen in the Nasdaq, and that's going to put some pressure on Nifty today. Now, moving forward to Asia, Asia is currently trading pretty negatively. Tech tensions between Washington and Beijing are weighing down on those stocks as well. So the Nikkei was down 0.5%, the Topix was down 0.2%, the Kospi was flat, and the ASX 200 again losing 0.7%. So Australia has been particularly weak. Korea has been particularly weak recently. Japanese indices just about holding on, I guess, okay. So Asia is also feeling the pinch of the US handover this morning. Now, European stocks on Friday closed down over 1%. The Stoxx 600 was down 1.1%. Again, technology stocks, they led the losses here, down 2.6%. The only green shoot here in Europe was that the banking index actually did well for a change. That was up around 1.6% for the session. So that was one positive cue you can take out from Europe. Now, commodity check. Usually, if you look at, how the global cues pan out, when equities don't perform, gold tends to perform well and acts as a hedge against the risk people are perceiving with equity. But that doesn't seem to be happening this time, and it doesn't seem to be happening for the last couple of trading sessions. Gold a couple of weeks ago was far above 2,000. It was at $2,080 per ounce. Now we're struggling to even get to $1,950 per ounce. Gold is currently at $1,930. That's spot gold I'm talking about, and it's been pretty much flat throughout the trading session. Barely any recovery seen in futures overnight as well. US gold futures were $3.5 lower at $1,934 per ounce. So the outlook for gold not looking too positive despite all the turmoil that we're seeing in equity right now. So perhaps there is still a long-term belief in equity. Now, oil prices, they fell 3% on Friday as well. They have actually been headed for their biggest weekly decline since June. So last week was one of the worst weeks for oil that we saw since the last 2 months, essentially. Brent, which is the international benchmark, settled at $42.66. So that's down $1.41 or a solid 3.2% lower for Brent, and WTI fell $1.6 or 3.8%, finally settling at under $40 for the first time in a long time, under $40, 39.77. That's for US WTI. So that's the forces that are likely to impact our market and trade this morning. Nifty should definitely open under some pressure.